ascertain where it might go to, and it's called a measured move. And the way that you would do that measured move is to have a look where the pattern, where the 2 points of the pattern are, where they meet effectively. So this is the lowest point. The highest point is up here. So really, we need to take from the lowest point, and we're just going to draw straight up. So you can just get a vertical line tool, bring it down, get it on your points. Shorten this line up just so it's a bit easier for you guys as well. Take off the ray. And what we then do is we can slide that line along where the pattern breaks. And if the pattern breaks higher, that will suggest that the measured move will lead us up to 65.65-ish, depending on where it breaks. It might not break till over here, so that brings it down to 65.19. And if it breaks down, let's say it breaks down straight away on of the week, then that leads us right back to the lows again. So you're really watching to see where it breaks and if it breaks, but you can wait until it breaks, because this is getting right to the, I think Jeff used the word fulcrum, which I quite like. So it's getting right to the fulcrum. I'm hoping that's the right term, which means this is getting squeezed and it will have to go one way or the other. And that's really what we've been dealing with for the last few weeks, really. The last couple of weeks, we've been just seeing the market just getting to shorter and shorter ranges. And these kind of ranges really provide elasticity to the market and a bounce point, just a spring, and you'll just see it explode either up or down. And really all we got to do is just wait until the market gives us the opportunity to suggest it's going in that direction. So on a 4-hour chart, you can see that it will be probably a break of this 57, well, the lows at 5,700. So on the 4-hour chart, if that breaks down 5,700, the likelihood is we'll probably get pretty close to breaking down this. If that happens on, what's it today, the 24th, Monday, Tuesday, Wednesday, if that was to happen Wednesday, that would suggest that Wednesday would be a really good day to start looking at the shorts in the market. And in actual fact, that line might even be a bit tighter there. It might even be there. So that would suggest that actually it could even happen on Monday. So breaking down 5,700 on the FTSE, the UK 100 to the downside, and holding down there. We are looking for shorts, and we'll look for those shorts to play out to near these lows here. Now I have just been checking out every stock in the FTSE 100, and it's a really interesting picture because the patterns on each individual stock show very, very little. They're really showing a market which is doing, it's reflected very well in the FTSE 100. They're all kind of rangy, and they're all waiting for something. Now we don't know what that is, but there are a few different things that can happen, and there are a few different drivers that might start building into this market. Now we know that the data has made so far no impact on being a driver. We know that when the driver happens, certainly to the downside, if there is a driver to the downside, what's going to light the touch paper? And the data is abysmal. There's nothing about the economy which is suggesting that we are in recovery mode. So the downside is still very, very much in play when we look at the fundamentals. But we just haven't had the catalyst to light the torch paper. So what's that going to be? Well, some things we don't know. There could be a catalyst which Donald Trump comes out and annoys China. It might be that we find out that Kim Jong-un has maybe passed away. It could be something like that. You just don't know what it is. There are going to be news events that happen that you just got to be on the ball with, and the charts will express how the market feels about those. So if you hear something that's quite big, have a look at the charts and see, does the charts suggest that the market is perceiving this as a negative? Because if it does, then we get in our short, and we know we can play it short for quite some time, because the data will then effectively drive the rest of it down. The worry will really start to kick in. If whatever happens drives it to the upside, then all that will happen in my world is that I'll wait for another point to look for the short, and it can go as high as it likes, because until that data does switch around, this market is going to start being incredibly overvalued again. Very, very few companies are paying dividends. More and more companies are coming off the promise of paying any dividends this year. So that means the returns are going to be weak. The returns are going to come all from capital gains. The returns will come all from the price movement, and that just won't be able to be sustained. So let's watch see what. Yes, sorry, mate.
Sorry, mate. How you doing, mate? So bias is short, right, Ash? And bias is short because everything's a mess, and what's concerning a bit here is that the chart doesn't quite line up with our beliefs, right? We think we think short's the way and have done for a little while, and now we're just waiting for it to play out, and the chart isn't quite showing us that. I mean, interesting for Justin to call, and I know that it's just a term they use in the market. I don't mean for it to be rude, but Justin talks about that the dumb money is buying at the moment. Small little retail traders are buying because they think stuff's cheap, and they're a bit early. S&P earnings starts coming tomorrow, don't they?
They've started.
Yeah, big week. So a big week coming up.
Yeah.
Lots of earnings reports coming in this week. Do you think that when we see some earnings that might start and be the catalyst for moving the market?
Well, we've started to see some of the earnings, and they've it hasn't really taken it in the direction that I thought it would. It could be that, mate. It could be, and I think that's the problem, isn't it? Is that anything could like the touch paper, like the torch paper, but I just don't know what it is. And when it comes down to it, the charts will always react after the fundamentals. Which is why it's so great to be a technical trader, because we don't have to worry about the fundamentals and hop in early while everybody else is hopping in because the fundamentals are bad. We can kind of look at the chart and go, okay, the fundamentals are there, everything's in place there. Now we're just waiting for our downside setup. I think you make a valid point. I think it could be earnings. But that doesn't mean that we need to stay on top of each company's earnings and understand it, because and I think that's the thing. We're looking at the holistic view of what's going on. I don't need to know each company, but what I do need to know is the economy on the whole. And I know if the economy is bad, earnings really by definition are going to be bad. On the whole for a lot of these companies. So then I'm just waiting for the chart. I'm just waiting for the chart to kind of play ball. When the chart plays ball, then I can go short. But if the chart goes long, then I will have to trade it, because I will trade it on a technical basis. But that is the benefit of being a trader over an investor, because I can get in and out very, very quickly at very, very little cost. So I can trade this. I can still go long if I need to. But what I really want.
That's right, mate. So the guys that watch you do the European session, which is about. So is it still 3 p.m. Singapore? And then the is it 4 p.m. It moves around 3 p.m. Singapore?
I think so. 5 to 3, yeah. So it would be.
And then the US session around 9 p.m. Singapore, isn't it?
That's right. Yeah, 9 till 10.
9 till 10, great. And these guys who come into that show, you've got the free show for the UK Open, you've got the paid for show for the US Open, and guys come in and they can see you doing this kind of analysis. Do you trade just the FTSE, or do you and leave Jeff to do the currencies, or do you do a little bit of each?
I trade predominantly the FTSE, but I am interested in currencies because I'll certainly I need to have an opinion about currencies, and I need to have an opinion about oil, because everything's interlinked, and I can get certain hints and tips from what's happening in specific currencies to let me know what might happen with the stock market. And just on a very simplistic view, if I see the Australian dollar is moving up, then I have to be mindful that is a growth currency. So with a growth currency, that would tend to correlate with a stock market going up as well. And if I see the yen increasing in value, that might correlate to a bearish stock market. So I need to be aware.
So for new traders, you need to be careful. You're not talking about dollar yen, you're talking about the yen itself, right? So if dollar yen's going up, yen's going down. So they need to make sure they understand which one's which, right?
Absolutely, yeah. So if the yen is strengthening, then the dollar yen will be going down. Absolutely right. And if the Aussie is strengthening, then the Aussie dollar will be going up, and that will suggest that there is global growth going on, because it is a commodity based currency, and the yen is tends to be a safe haven. Gold is less of a barometer, interestingly. Because what people can do is buy the stock market while buying gold, just to hedge out their positions. So they will just to explain what that means. If the stock market was to crash, the gold market will probably go up, but they can go up together, because while they're buying stocks, they'll buy gold just as protection, just in case they are wrong and the stock market does go down. Then you'll see gold really start to accelerate. So gold tends to be something that a little bit more nuanced, whereas the yen dollar yen going down will very much suggest that the stock market is going in the same direction. So those two are almost married together, whereas gold's a slightly different picture. And obviously the other one is the pound. Very, very important. If I'm trading the FTSE 100, which is the Financial Times Stock Exchange, which is based in the UK, I need to know what the mother currency is doing, and that's the pound. Now I'm on top of the pound. This week we've got more negotiations going on with Brexit. I'm interested in the price action with the pound, and I have to say, when I look at the price action with the pound to me looks pretty heavy. That this is I look at this. I'm looking at this on a weekly chart. It's already put in what looks like a high test or a shooting star, whichever description you put of this bar. And also it is coming off a bit of a level. It's sometimes not easy to find this. The most common line that people will draw is just straight across. Look for a horizontal line, and what will tend to happen is the market will extend and then retrace and test where it's come from, and that's the area that a lot of people be interested. But then you might be missing something, because look at this line right here, this low and this low. Now when we extrapolate that out, that's suggesting that we've already tested a potential resistance area. Now, if that's if you draw this up, I don't know whether this is look at that little kind of channel almost going along there with that point there and that point there. So if this channel is where it's testing, then this already could be the point that the pound starts to look like it's a bit overvalued. And then obviously it's a case of going down and having a look. Is there a setup? Looking at that chart, not 100% clear. Even though when you look at this, easy. I'm hoping people are starting to spot these patterns now, but I find this one, really easy to spot. That's looking to me like a head and shoulders pattern on the daily, and the right shoulder might start to form. So there could be a little bit more upside with this, but this pound to me looks like we could be looking for some downside. You couple that with Brexit negotiations going on. Every time there's a Brexit negotiation, the UK digs its heels in and the EU starts to say that there's no deal that's been likely. That will weaken the pound. It tends to weaken the pound, and even euro pound will more likely strengthen. So the pound will even be weak in that particular currency pair. But just looking at recent history, Brexit negotiations tend to be pretty negative for the pound, even though there might not be a fundamental reason. There's speculative reasons that everybody knows that a bad or no deal will be awful for the pound, and those negotiations don't ever seem to go very well. So likely that we see some pound weakness if more announcements come out with that. But as I say,
Yes,
weekly charts.
Can you put those back
Sure.
on for a sec?
Yeah.
You're the head and shoulders dude. It's your, it's one of those things that a big part of analysis works around head and shoulders at different times. I get that level. I get the next level. Now you put a third level over here, and it's at this stage untouched. Are you waiting for it to be touched for confirmation?
Yes. Well, let's have a look. I mean, I would, and I'll tell you, there's a couple of reasons that I want this one.
Yeah.
This left shoulder here to coincide with that right shoulder runs right through a horizontal line on this point here. Now, earlier on, I said that the market will tend to test where it's come from. Now, maybe it has on the weekly chart because we've got this level coming down here, but this is where it'd have to test where it came from on the daily. So yeah, I mean, I think if you're looking at 124.50, somewhere around about that, 124.50, for reversal signs and signals, I think that would be a really good area to look at.
Guys, look, are you guys following this? You can tell us on YouTube. If you're on YouTube and you like what you're seeing, then give us a like. Apparently it's good for the YouTube channel. Crystal, I'll get an answer to you a bit later on if I can. If you are on the YouTube channel, give us a like. If you're in the room, you've got something good to say, put it in the chat box. We'd like to hear some good stuff. Looks pretty clear to me, Ash. So one thing that does surprise me here, and I wouldn't mind your thoughts on it, you're short biased the FTSE and you're short biased cable, and they're not linked. They're opposite linked quite often, for you, aren't they?
Yes, they are.
Will you trade them in the same direction, given it's a Brexit negotiation thing? You think they might both go in the same direction, or would one of them go and negate the other here?
Oftentimes, if the pound weakens, the FTSE will strengthen,
Yes.
and that really is the correlation. That's kind of it's the rule of thumb. So even if a Brexit negotiation goes badly, it would not suggest that that the FTSE 100 would weaken off the back of that. And really, you bring in a challenge, and I suppose it's a bit like seasonality, where we will look at seasonality with a pretty high percentage success rate of the stock market and specific currencies and commodities reacting at specific times of the year every year. But there are obviously going to be certain years where they just decouple. And I guess this might be an instance where I will be looking for a decoupling. But I'll tell you what I wouldn't be doing. If I take a trade on the FTSE, I won't be looking at the pound as a trade as well, because in my opinion, that may well end up being the same trade.
Yes,
And I don't think you could hedge it either. You couldn't go long FTSE, short pound, because the FTSE might be reacting off S&P numbers. It might be S&P earnings numbers. It could be reacting off further cases exploding in certain parts of the world. So at that point they do become very much uncorrelated. So it's one of those things that you kind of have to understand. I guess that there are times they're correlated and you trade it, and there are times that other things will take precedent and you don't. It's a bit, and again, that's like the seasonality thing. There are times that seasonality will be the only show in town, and there are other times where it will be trumped by what the most recent and most important data of the day is. So I guess that's the reason that I wouldn't touch the other. If I get into a trade in the FTSE, I won't be touching the pound.
I would have thought that the cable FTSE opposite correlation would be stronger than most. I mean, a lot of seasonality is really good, around 70-80%, but I would have thought that cable FTSE uncorrelation was pretty strong over a period of time.
Yeah.
Okay, mate. So you're still looking at, you're a little bit short. You're short cable. You are short the FTSE. Someone's asking in YouTube, did you talk about NZCAD earlier, or was that Jeff?
That might have been Jeff. I am interested in the CAD though. Just on. Yeah, I mean the oil story. I do find the oil charts quite interesting, and I find the CAD quite an interesting currency for that very reason. And when we're talking about correlation, I've gone right down the food chain with this one. So I've looked at WTI, and what I saw with the other day with WTI is a bit of bottoming out. And if I bring you an indicator here as well.
What broker are you on? You're at 1706. Is that on Axie?
Yes.
Cool. Okay.
Yeah, that's on Axie.
That'll be around the same as Fusion, I would have thought. They'll be around the same price, I would have thought.
Yeah, I think they're called something different, aren't they? I'm not sure if they're...
Fusion and Axie both on spot, where the rest of them are on futures.
Right. Okay. So if I bring you this RSI.
Yeah.
Now, I really like the RSI. Again, it takes a little bit of time to get kind of used to how to read it, but there are certain things with the RSI which are just really obvious, and we've discussed it before. And you said quite rightly, if you think that you can trade an RSI because of divergence, which I'll explain in a moment, then you're gravely mistaken. You do need sort of other aspects that have to get involved. But divergence is something that traders will look for, and I will look for it just like everybody else. Yep. There is a low in the market. There is a lower low in the market.
Yep.
And so I couldn't tidy that up. And there is a lower low in the market. Now, when we look at this on the RSI, that's the same point coming down. There's the low. Hold on. There's a higher low. Now, already, all of a sudden, we're starting to get a little bit of a hint that the momentum to the downside is not matching the price points to the downside. And when you get a touch, and that's the significant thing, it's not the fact that you're getting divergence, it's the touch that makes the real key here. Third touch, right on the 30% line here, that really is that's a buy signal. That is a buy signal just on the RSI alone. Like forgetting everything else, that's a buy signal on the RSI.
Can I jump in here, Ash, for a second?
Yeah.
I find this really fair because I know the way you use RSI is quite specific, right? And the way you're explaining it's really clear.
Yeah.
I think one of the things that people need to watch out for as retail traders, what most retail retail traders do is they trade the divergence on the first cycle.
Yes.
And one cycle divergence is just a waste of time. I'm sorry, it's a low percentage option.
Yes.
Whereas the more cycles and the longer the divergence exists in the market, the stronger the signal becomes for mine. And people think of divergence as being a one cycle thing, and it's not a one cycle thing. You need to see divergence hang in the market. I love your touch there for the buy signal. I think that's exactly right. You put a line in there, it's touched it. So it's an expectation's been met. And I like that as a signal, if you like.
Yes. Yes, and then you know now we have to always respect that price is king. You know, price is what we always look at, and just like we're looking at what we looked at with the pound earlier on, this is suggesting the touch point. This is suggesting where this market will start to drift again. So what I want to know from a trading perspective, is there a point between here and here which will suggest a hold? And then I have to go down. I have to go down a few levels to see where that may be. You know, let's have a look at the 4 hour. 4 hour. Well, the price that could hold here might be there. We're talking about touching again. Could be there. Might even be higher than that. It might even be there. I'd want to see if there's a trend line. Not going to get a trend line on this 4 hour. Way too steep. Way too parabolic.
Let me just ask you something. I'm sorry to keep butting in, but I just want to, for people in the room. When you do this in your shows, you do it because you just whack that line on there and it's really quick. And I can see it because I've seen a million of these. But for new traders, when you do this in your show, you do it a bit slower, right? You take them through how to find these levels, right?
Yeah, I mean, to be honest, it depends what's happening in the show. You know, oftentimes I've got to be completely straight. Oftentimes, Jeff and I are taking trades, and what we're saying is, right, bang, there's a trade. Let's do. So we try and get people in, and then the information comes in.
I reckon they appreciate that as well.
Yeah, yeah. But certainly during the US session, we might come back and have a look at this after. You know, we might sort of like look at some of the points where we can actually then go into education mode. And the US and the UK show. It depends what's going on with the market. But you know, we're trading and the market is live. That's how we make money. And when the market's moving, we're moving with it.
And markets do have a tendency to either be busy or quiet.
Yes.
Don't be busy for 5 minutes and to give you 15 minutes for the quiet so you can explain stuff, right? The markets seem to either be busy or quiet. You either have nothing to do and also, you got to talk, or it's the other way around. And that's the reality of, and this is what we want. This is the reality of really trading as opposed to having, salespeople do stuff. This is what real traders do. You know,
I think that's right, mate. And the thing, and Jeff may well agree with this as well. I think we've had very few days where it's been quiet recently. You know, there's been stuff going on. We've been really sort of like on top of it, and we've made money. You know, we're Jeff and I don't know what we're up net profit this month, but we've had a decent month so far. So the listeners that got into the trades with us will be net profit up on our trades. You know, maybe not.
Pretty disappointed if something cost you $35 a month and you couldn't make some money out of it, right? And,
Yeah, and this is the thing. I mean, when it comes down to it, the education does become important, because if we can't make people money with the trades, we need to be able to educate to make you money in future, because then you can walk away knowing that you will be able to trade with the signals. And we can go in with the signals are a lot. We can go into the signals during the US session, because they are during the YouTube show. They may be sort of like people that have joined the membership, but there may also be whoever from I don't know, Denmark or Norway, or people that we've never encountered, because it's YouTube, so it's an open field. So it's not fair on everybody that is paying for the education for us to just express everything on that show. But during the US show, we can do that, so we can go into a bit more detail, which is what we try and do. So that's what we try and do more for the to educate. Look at the US show.
A lot of your stuff is sitting within early week moves last week. A lot of the stuff that you're trading have last week they've made a bit of a move in the first couple of days, and they've stayed inside that move Wednesday, Thursday, Friday. But it appears to me you're thinking we're going to see more move this week. That the FTSE should break down, the pound could break down, and oil might break up and put a bit of pressure on the CAD.
Yes, exactly. And this is the thing, you see, I was, and this is what I was going down. So I was going down my food chain, and I looked at oil and I thought, let's see what happens with oil. And this is the great thing about it. This is where we can go, right, let's check oil, because if oil holds here and then breaks up, it doesn't matter if I miss it, because then I can go down to see what is affected by the oil price going up. I can go to the CAD. You know, if I trade stocks, I can go to BP or Shell, which I do. You know, I've looked down the food chain and I've gone, right, what's the CAD doing? What's the NOKI doing? What is that's the Norwegian kroner, which is also very susceptible to all changes. What is BP doing? So I can go and have a look at FTSE 100 specific stocks and also use that. And it's just whichever one you can pick up. So if you see oil starting to put, now let's get back to currencies because that's what we're all trading here. But if I see oil starting to strengthen, I can have a look at the dollar CAD. Just it might not be the best cross against the CAD, but let's consider it first and see what it is showing us on a weekly chart. The dollar CAD I think is a little bit messy, but I would say that the price action does look a little bit weak. You know, when you look at this bar here, I think you could make the case to say, if I see something on a daily or a 4-hourly for a short, I think it's worth taking a punt. I might not put my house on it, but there's a lot of expression in these bars up here, which is suggesting that there is some weakness there. Now,
5 of the 6 have got top end tails, right? 5 of the last 6 have got top end tails, you know, and top end tails tell you that they just haven't been able to sustain that move up. And if that move up's failing, then the next move is the other way, right?
Yeah, it tends to be. But so we're looking at these top end tails. We've got one there, one there. Can I draw a trend line on my daily chart? That's my next thing, because that would have happened over the daily time frame. Well, not really. I mean, in actual fact, that's breaking through. Now this tells me I've got an inverted head and shoulders. Now that's bullish. So I can't trade now. Now when I look at this, I can't trade anything until I get a level that I can break to the downside. This looks pretty good. So then I look down here and I'm saying, well, there's a trend line that's along here. Now I don't know what price point that's going to give me. That's going to be a long way down. So that would be a target. So if I can get a short in somewhere here, I'll look at that as a target instead of a break point. So what is a 4-hour telling me? 4-hour is trending down. A little bit of a break here. And I've got a trend line along here. Just down there. So it's going to start with oil. It's going to start with the picture with oil. What's happening with oil? Because this could fluctuate either way. But what it is suggesting to me is if oil strengthens, there's a good chance that the CAD could strengthen too. Now, as I say, whether it's best against the dollar, I don't know. But if this chart continues to hold this level, this is going to be of interest to me. And then I'd want to start to see it break down and break, you know, and see if I can, you know, now I've got a target in place as well, right? I've got everything I need to take this trade, except for the story with oil. You know, that will potentially be the driver. I haven't checked Forex Factory just yet. I'll be doing that later tonight to see if there's anything else that might well shake these markets up a bit. But this would be of interest to me, and then I'd have a look at other currencies to see what might be worth it with a CAD. Now we've talked about the pound. That straight away says to me pound CAD short might well be a trade if I can see oil holding in this particular area.
Cheers, mate. Mate, last couple of minutes, mate. What do you got for us? Anything to wrap it up?
No, but I would. No, I'd look at this. I'd look at this pound CAD short. I quite like the look of this. Yeah, pound CAD short would be a potential trade. So what that would do is potentially get me into a short pound, which would be my belief, and a long CAD, which would be my belief if I can get the whole. But I suppose maybe to wrap it up, just to kind of explain not the trade but the process. The first thing I've done is gone. What looks weak to me? You know, what could potentially be weak? Well, the pound looks kind of weak. Pound dollar, well, you know, that's the obvious default. What could potentially be strong? CAD. Let's have a look at the CAD dollar. That could potentially be strong. And then if I marry the two, and I go to the pound CAD, then I've got my belief in both of those trades in play on the same chart, and then it's just about getting the setup. So I suppose I'd encourage everybody to do that. Don't just go in and go, I quite like the yen this week. Let's go dollar yen. Go in and go, I quite like the yen this week. What don't I like? And then look at that as a currency pair, because that gives you a bias. That gives you a fundamental bias before you sit down and have a look for setups in your chart. I think that's quite a powerful way to try and trade.
Mate,
Nice.
first thing tomorrow, I'm on board. Pound CAD. We could be looking for a trade tomorrow.
Good man. That's what I like
Nice
to hear.
stuff.
It's going to be a
Guys,
slingshot tomorrow.
Plenty in the room. Thanks for being with us a lot. If you're on YouTube, plenty in the room. Great to have your company. We're going to talk to Ainsley. Then I'm going to have a chat about what we're doing for ATW traders in May. I've got the first of the releases we're going to do. A lot of our traders around the world are locked in for the next 4 weeks. We want to make sure we do everything we can for them. So we have something lined up for you guys. We're making some announcements about that and some more during the week. And then to Jeff to do some technical stuff. Going to try and wrap us up out of here in about maybe half an hour, just over half an hour from now, because of course we're back an hour later at 11 p.m. New Zealand, 7 p.m. Singapore, to do the updates on the trading software and talk about Ainsley's course. Ash, thank you very much for that. Comprehensive as ever. Great to have you along, and thanks for your contribution. We will talk to you again in a few weeks. One of the new formats for the TTR show now is we're trying to get Ash in every few weeks, Julian in every few weeks. We'll try and get Justin and occasionally Orlando in to do sort of market overview stuff before we get into the technicals on gold and oil with Ainsley and the technicals with Jeff as well. Cheers, Ash. Thank you very much.
No problem. More than welcome. Thanks, guys. Have a great week, and we'll see you in the show.
Cheers,
Thanks,
thank you.
thanks, Andy. See you tomorrow, Jeff.
Cheers. I've got Ainsley and Jeff in the room. Guys, you guys were a part of the chat on. In fact, I'll get Ainsley to pick up the chart if that's okay.
Actually, Paul, can I get you to put your chart up, because my internet won't cope with everything.
Okay. Let me
Don't
see if I
have
can.
it, just won't do it.
Okay.
What city do you live in, Ainsley?
Oh, don't ask.
It's the capital of Australia, right?
That would be the capital.
That's
And
tough.
my Wi-Fi and putting charts on Skype and talking at the same time. And
Guys.
I kept getting big notices saying internet connection poor, and then I eventually drop out. So if I don't do the charts and I just talk, then
Guys,
just life's a lot easier. But welcome to Telstra.
So we had Ainsley and Orlando come into the US session of your show last week, I think, Jeff, and talk about oil and why these prices are different. Can someone give us a summary on it, please? Why is oil $7 on one and $17 on another?
Did you want to go, Jeff, or?
Oh no, you're the oil person, not me.
Oh, look, it had a lot to do with the futures as well. And I don't trade futures, so I don't. It's like saying, well, why is there such a difference on Brent, and Brent's so much stronger than WTI, and the difference between US oil or West Texas Intermediate and Brent, which is a UK-based oil, is the fact that when the futures contracts settle, they don't have to take delivery, they don't have to produce the real deal, whereas with the WTI they do. But
let me have a crack at this, eh? Let me jump in. So different brokers, including I think Fusion, AxiTrader, IG, all show a spot rate for WTI, and other brokers, IFS is amongst them, and plenty of the other brokers show a futures price, and they roll between futures contracts. Even before the contract expires, they roll from one contract to the other. So one is showing a futures price and one is showing a spot price, which is why they're quite often markedly different between different brokers. One is spot oil and one is futures oil.
there you go.
Ainsley,
What a
both
week.
of them show a positive price for oil, but the media keeps telling us we're having negative prices for oil. Can you tell us something about that?
It's just spec buying, speculative buying by retail traders. You don't have any of the commercials in there. The oil market's basically broken. And one of the things they keep saying is just be really careful of oil. It looks like it's bounced up. Look, I think it's a bit of smoke and mirrors you've got happening there. But Jeff asked me if I was trading oil earlier in the week when I was on the show, and I just say I'm staying away from the market. It is broken at the moment. There's a lot of things that have to be put in place. They're basically giving oil away, is what they're doing. There is no storage. But the problem is they can't stop pumping, because to shut it's not just the same as, it's not just as easy as going in and just saying, okay, we'll just won't pump today or whatever. It's
not the same as a
shutting-
petrol station, right? It's not you just go and pick up
Exactly.
the pump, put it in your car. It's not quite like that. Just shut down an oil well, right?
No, it is. It's a lot more complicated than that, and they can't do it.
Which is
Now-
why their agreed cuts to oil production is 4 weeks away, because it takes a while to put those cut productions into actual process, right?
Yeah, and we talked about this last week, but and I know I skimmed over a shopping list of all the things that had happened on the Friday with the Chinese economy. It wasn't cracking up as quickly, and storage was at capacity, and what else? The 9.7 million barrel agreement. The small little detail of it was a month away for it to actually take effect rather than an immediate cut. All of those things, everything, and then the futures contracts fell due on Tuesday, and we just saw the market it basically fell. It fell 305.97%.
I don't know how anything falls more than 100%, but you know the people are better maths at me than I've just mentioned that number a couple of times. Tell us this, Ainsley. Last week was last week, and it fell to pieces.
Yep.
What should our guys do with the world this week? Do they actually just, if you're a retail trader, you're out of this until we see a higher low? Is that right?
I would, yes. Yeah, your fundamentals aren't stacking up with your technical chart, is basically, and that is a rule in anybody's language, whether you're a technical chartist or a fundamentalist. If your fundamentals don't back up what's happening on the technicals, you just leave the chart alone. Go trade something else, like Ash was saying. Let's go look at dollar cat. Let's look up and down the food chain. The oil market, WTI, is not good. If you've got to trade oil, you feel you have to do something, go trade Brent. But please be careful if you're going to do that. But WTI at the moment is a very sad story. You've got too many fundamentals that are just not stacking up to a market that's about to take off. Whether some of these, what would you call it?
Things, Ainsley, when you say it's a really sad story, the sadness part of the story for mine is that there's a seasonal buy and all that's always on, and I've talked about it a few times, and I'm still a believer there's a buy coming for oil, and it'll be you can make a career in buying oil at the right time. Why it's a sad story is because the professionals have got out of this, and Cott tells us that.
Yes.
The retail guys have kept buying this, and they're being smashed to pieces on it. And look, this looks like guys buying and adding and adding and adding as it falls and falls and falls. And I've talked about that as a mathematical equation, something you can do, but you've got to get your maths right. You can't have the pride take over. You could be in a position down here where you have a few buys in the market and you're looking pretty good if it goes up. And if you've done that in a controlled manner, you'll be fine. This oil is not going to end the year at $8. Are we going to see 5? Well, there's some talk we might, but if you've done things right coming down, then you're okay. But the guys are going to get smashed up here. The retail guys have gone with big size and bolt and bolt and bolt. And boy, there's only so far you can do that on. And the problem with this stuff always is, and this is, retail guys trade in a professional market, and professionals are out of this market and sat. And, and if you have a look at it, the real damage was done in the last, really the last week. It was only really obvious it was falling to pieces from Monday. And you need to be out if you're not out. So our guys need to stay out of oil, Ainsley, right?
That's my recommendation.
And when it comes to gold, interesting to have you and Julian talking about it earlier on in the traders call amongst our guys who trade the money with us. You continue to be. We see opportunities to both buy and sell it, don't we? There's some big numbers being talked about by different people for gold for the end of year, as there is every year. I remember reading something, 10, 15 years ago telling me that gold will get to $2,000. And they're right. It will get to $2,000. It just, not quite this week or anything. And you remain bullish on gold?
I do.
Shall we have a look at it?
Yeah, let's have a look at gold. And I know Julie and I have differed, but he's also very conflicted with with what he said. And like we were saying last Sunday, we're expecting a retracement, and we certainly got it during the week. But look at that low test bar in the middle of the week.
You just got to wonder, as a trader, I know this is a red bar and it could be a green bar, I guess, to make it clear, but, really and truly, when you want to move up like this and you get, that bar there, you'd hope that anyone who's trading gold got into that, and that's one of the things that Ash said. He's short biased the FTSE, but if it goes up, he's going to buy it to make some money because he's a trader, right? And really, you might go at your bias with better risk, but really, when gilt edge opportunities turn up, and I think we're going to expect to see gold around the levels that we are. We may well on a shorter time frame see a little sell here and another pullback before she goes through. It might go through first thing tomorrow morning. I don't really know, but there's certainly some opportunities there to trade the price action in front of you and have the bias long, right?
Mm-hmm.
And you will be biased long for the rest of the week, right?
At this stage, yeah, because at the moment, like I said, world's gone slightly crazy. Well, last week for me, the world has gone slightly crazy, especially when you see oil down at minus $37. What was it? $37.63 US a barrel. To me, that's the world gone crazy. And you can see the whole way through the week, none of the currencies got up and went anywhere. They just consolidated after some fairly wacky moves backwards and forwards on a larger range. So to actually have something move down as we thought we were expecting a retracement, because unfortunately nothing goes straight up. It was one of the few things that had put higher highs and higher lows in place, except coming in at the end of the week. Now, my only concern with that pattern that you're looking at there is that we've got a double top happening out. So whether we have another pullback or whether it is a flight to a safe haven, only the market will tell when it starts trading. The only interesting thing that I noticed last week was, and this is one of the things that had actually put a little bit more pressure on gold over the last couple of weeks, was the fact that the refineries were shut down. So for the delivery of the contracts in New York and the cancellation of flights to transport that gold put further pressure on gold and kept its power in there as a commodity in demand. So the demand kept the pressure on and the supply was diminishing. But last week, the Royal Perth Mint has been opened again and is going double shift to actually supply gold to New York. And they're getting it across to New York. As said, if I can get some shoes, I bought some shoes online. If I can get 3 pairs of shoes from Germany delivered to my door within the week over Easter, then I'm pretty sure the Royal Perth Mint can get their gold to New York. So those kind of things are happening, and that will certainly help things along. The fact that gold is available. Yeah, again, I just believe it is something that people are hoarding. The more you read about gold, people are hoarding it, they're not selling it. They're holding onto something that makes a little bit of sense to them.
Interesting times. Okay, so sorry, Angie, you're still basically a buyer, just looking for the right opportunity in gold, right?
Yeah.
And
oil
is something that you might be trading, but our guys, if you're not a professional trader, you be out of oil till it gets clearer, right?
I'm out of oil.
You're out of oil.
I'm out of oil.
Yeah.
Yeah. I don't want to speculate. I want a little bit more information in front of me and a bit more direction. When you've got the best traders in the world just out of oil at the moment until something makes some sense. You don't go and try and make
past 1 million coronavirus cases in the US tomorrow as well, and that news will not be good news. That's good news for consumption of oil on the planet.
No,
it won't encourage that. There's going to be return to work in the US very soon.
Look, they talk about that, but the fact that the oil industry in the US have actually gone to Steve Mnuchin for a bailout package, that would seem to indicate that they're not looking at turning on the tap and pumping again anytime soon. You don't go to the government and say, we need to be bailed out right now.
It's it's an interesting world we live in. It's one of those things where, as a trader, I'd far rather the world wasn't in the situation that it's in. But for all the drama of the current financial stuff, as a trader, it's interesting, and it's far more interesting trading than when nothing's happening, you know? So as a trader, it's pretty interesting stuff, and opportunities will continue to abound. There's going to be a lot more in the next 6 months, I reckon. Anything else from you before we wind it up and do some technicals with Jeff Ainsley?
No, I'll let you do the technicals, but as I said, I'm just really, I'm watching the Aussie dollar. And I'm watching the Aussie dollar because I think, and the Kiwi, and I think that's because the way our economy is going to bounce back is probably a little bit stronger than some of the others. And I think it comes down to the way that was the situation was handled with coronavirus.
Yeah, we will see how that plays out. Certainly looks better in
How
both
that
our countries
goes.
and in most at the moment, doesn't it? You know, interesting, you know, you've got to say that neither
Let's hold
Australia or New Zealand does this a lot. We're not big range currencies, you know. Every country
No.
does. I'm not saying we never do it or anything like that, but it's not often that you see them both in quite tight ranges, you know. And
Yeah,
you do
but
expect
that's
it's going
not
to pop
going
out
down.
of that and go somewhere, you know.
Yeah, it's not. It's just look at it. Look at what it's done for the last couple of weeks. It's just come off those bottoms and had a small retracement, and it's just, you know, and some of those retracements were employment figures. I mean, that's to be expected,
Yep.
isn't it? I mean, you expect, okay, big numbers with unemployment. That's going to happen for a little bit longer. And I know people are desperate to get back to work, but things are just really interesting at the moment, Paul, because that hasn't turned around, hasn't hit a level and turned around and come screaming back down at any point. Whereas you look at some of the other currencies, the major currencies, they have flicked around like nobody's business and stuck between a range all week.
Yeah, look, it really has. It's been an interesting week. There's a lot of stuff that looks pretty sideways to me in the currency markets at the moment. It'll come out and be great. It always does, you know. Okay, look, Ainsley, we're going to finish up with Jeff. We're going to do another 45 minutes, and we're going to start a update and a new release on our trading software. And about 45 minutes after that, we're going to have you come in and talk about your new program. The webinar for the trading software and your programs combined, it's oversubscribed. We've got too many people. We won't be able to fit them in. So looks like we'll be having to rerun it and do another time, you know, reasonably so much to run another one for people who can't get in today. It's nice to have it packed, but we're ready to talk about some exciting stuff. Really, you've had a pretty solid start to the year, haven't you?
Oh yeah.
There
it was
are
solid.
people who would take your last 5 months as an annual salary and be pretty happy, right?
Well, I've got to see where my gold this gold trade ends up. As you know, I've been in this one
Yeah.
for a little while, for the last couple of weeks. I've held on to it, got in at just over 1,500, but yeah, I'm still long on that gold. But my gold that I did, my seasonal gold trade, as you know, I call it my school fee trade, over Christmas, and yeah, that was a pretty solid trade that came in. Yeah,
We've shown that record in a couple of events. Can we? It's a 6-figure winner, right?
Yeah.
And we'll talk a little bit about that and about, well, you and I were talking about that in about an hour and a half from now. 7 o'clock for trading software, about 7:45, we'll have you back in to talk about that kind of stuff there. Looking forward to that. It's going to be, and I say that is already oversubscribed and badly oversubscribed, unfortunately. We don't mean to do this, but it has just been packed up in the last couple of hours. So we'll get in everybody we can get in, and then we'll reschedule into another one of these pretty quickly for people who do want to come. You're going to make a pretty special offer for the mentorship students in a couple of hours from now. I'm going to talk about another offer before we go to Jeff. Here's what I'm going to do, and I want you to listen to this. Look, I think it's really easy in business to, and I've been thinking a little bit about, Actions to Wealth in the last couple of weeks when I'm locked in my house, not much else to do. It's really easy to get distracted by 1 or 2% of your traders or clients who are hard work. And what I want to do as our guys are locked in is I want to really look after the 98% of our traders to do a bloody good job. So here's what I'm going to ask you guys to do. If you've traded this year, if you followed our rules for risk and strategy, and your account is down, and you're not in a chat group, so if you've done the things we ask you to do, I'm going to ask you to email in, and around the 1st of May, give me a couple of days grace, but I'll top it up for you. So that's every single Actions to Wealth client, people who are trading our accounts with our money in it. If you're trading our accounts with our money in it, you've traded with our strategies, our risk. This year, we will top your account up for early May, so you can spend the month of May at home trading a fully topped up account. No charge, no nothing. We'll just do that for you guys to get your May underway a little bit better. All you need to do is put a stop loss in every trade, 1% risk, trade our strategy, not be any chat groups. I'm going to be really clear. I'll say this again now, I've said it a few times recently. If you're in a chat group where other people are telling you what to do, then they should be paying your losses.
Good
If
call.
you're in a chat group of people who are making no money from trading and taking their advice, then you should be paying your losses. That's not on me, right? If you're following our broadcast groups and our people, if you're the 98% of brilliant traders, and you are doing your level best and you're trading our strategies and our risk and our stop loss and taking our advice, then we'll top you up. And we'll top you up, no questions. Send me an email, send it to contact@actionstowealth.com, put attention, Paul. I'll go through them early next week, and by around the 1st of the month, give me a little bit of leeway. It's a pretty busy time. I'll top your account up so you can do May. We're back wherever you started, and we'll just move forward. I want to make that criteria really clear again. All you need to do is do what we've asked you to do. Trade our strategy and our risk on our account. Take our advice only. And if you do that and you're down, we'll do the right thing by you and get you ready for May. I am determined we're going to make a big difference in May. We have some big announcements coming in the next few days on stuff that we're going to do for you guys. Keep an eye out for those announcements. We'll put them into the broadcast groups. In the meantime, if you've done that, if you've placed trades this month, if you've traded as we agreed, our risk with a stop loss, our strategy, and you're not getting help from anywhere outside of us, not being influenced by people who aren't making any money, then we'll top you up. Send us an email, contact@actionstowealth, lag at attention, Paul B, and in the subject line, and I'll go through and check those accounts later in the week, and we'll try and get you guys topped up for the 1st of May. If there are any questions on that, put them in the chat box. I'm happy to do it, and I'm happy to answer. You can send them straight to me, and I'll talk about it a little bit after Jeff. To be honest, I've come straight in here from 2 other calls, one after the other, so I really wouldn't mind. Hey, welcome along. There's a Custard. Hi, new to this, and time to learn, mate. Just keep on listening and be around as much as you can be around, and we'll teach you as much as we possibly can. It's going to be a busy month in May. We're going to do a lot of stuff for you guys. We have our intention is to see if we can get as many guys through as we possibly can. Now, something's going on with my my chart. Are you guys seeing what you should be seeing?
See, this is what happens when New Zealand's an outer suburb of Sydney.
Oh, I just don't think you can say those kind of things. I mean, New Zealand's internet actually works most days. Most days, not every day, but most days, you know. Rightio, guys, if you've got any questions about that, jump in the chat and I will ask them when I come back. As I said, I have gone phone call to phone call. Have we,
Okay, I will see you later, Paul.
We've lost it. We're back on YouTube. Looks like we're back. Hey, Ainsley, have a nice short break. We'll see you in about an hour and a bit, and we'll talk about your course and what you've been doing and how you're going to share that over the next few weeks. We've got a few dates coming up for you. We've got a pretty good offer for everybody, particularly the mentorship students, a hell of a bonus. So make sure you do get in. And look, if you can't get into that webinar at the start, wait 45 minutes and an hour and try again. That webinar will be full when we start today, but people will watch the trading software and leave for Ainsley, and people will miss the trading software and come in for Ainsley. So hopefully we can get as many in as possible for today's session. Jeff, what's happening technically for us?
Mate, glad to hear Ainsley's out of oil. I had an FJ Holden once upon a time that was out of oil. And it didn't end well. I've got to tell you, you've got to get back into it, Ainsley.
You try and compare me to an FJ Holden.
Yeah, well, it was probably a little bit later than that, but you know what I mean.
I'll leave that with you.
That was my first car, actually, when I was just a little.
An FJ.
I think
So
it was actually.
Did they make cars in the 18th century, or did you not buy them until you were 25?
They were doing it. And they were doing it strong. Sadly, they don't do it anymore. We don't have a car industry. And there's a point that I'd like to address. This coronavirus could do wonderful things for Australia. And Ainsley touched on it a little bit before. And I see you're on the Aussie dollar there, mate. And to be honest, I expected it to retrace a little bit further than it has. Not sure about it right now, but I love that little box that you've got on there because that's a box that I love because...
Yeah, that's what you trade, isn't it? It's one of the reasons we have you on the show, isn't it? We have a lot of
Yeah.
people that trend
Range.
trade, they do a lot of stuff, but you trade this stuff. And I think it's really interesting to have you on because, you know, there's trend trading stuff with Paul Hutton, you know, Tuesday, Wednesday, Thursday morning. You know, there's always Ash with you as well, talking about trading trends and making money from it. But I love the fact that you trade the box. I think it's really interesting. But Jeff, I've gone call to call to call and had to share my my charts. If you could share your charts, I'll be back in 5 minutes.
You can't get out, can you? Look, there's very good internet here in Tasmania, I'm pleased
All
to
right.
say.
Can you go to the
So let me
screen?
try,
Hotel
let me try and
California.
do that. There we go. It should be
Okay.
happening right now.
Cheers, man. I'll be back in 5.
Happy days. All right. Look, speaking of boxes, and as we are and as we do, it's kind of that time where if you could shift back last week, and I started saying that we're in the middle of ranges and now's the time to start thinking, okay, we're going sideways. And that happened pretty much to the point. There were a few issues with it in that we moved a little bit quickly once we hit the bottoms and didn't have a lot of opportunity to get into. In fact, I made one mistake that I'll point out to you in a sec. Well, I won't call it a mistake. It was just a trade that went wrong. And I'll point that out to you, but it was exactly what we're looking for. And everything else panned out just about nicely. And I'm very happy to report that I don't expect anything to change this week, because here, if we look at euro dollar, for instance, yes, we broke out of the range, but look, we're headed back into it. And as soon as we do, and this is a very tight range I'm talking about, it's only about 10 days old. But that's exactly what I see. Big picture, of course, is not the same. Big picture is telling me that we are still, or are we? Question mark, question mark. Are we really still going towards the bottom? Let's have a look at the horizontal level here and see what that tells us. What do we bounce off? And I'm looking over here. I'm not looking anywhere else. Is it significant? Maybe not. Let's have a look at the bigger picture. Still, there's that level I just put on my chart. I don't think it is. It's got a bit going on here, but it doesn't have any mates. I like to see both resistance and support at the same time. I'm really not seeing that. What I do see very clearly is that we've gone absolutely nowhere in that month, which was which was March. Now we're into April, and we've really got a purpose about it. We really are headed back towards that bottom. So that's the only bias I have on the euro is short. Bring that back into this little area, and you can see we're at a support level. Bring that back into a chart that we trade, aka 4-hour, hourly, 30 minutes. And that's exactly what I'm seeing, right? So we're coming back into that little range that we've left. But pursuant to what I've just spoken about, I've got a bullish bias now until we get to this area. Forget the weekly pivot, that'll move. Won't move far, mind you, because we didn't move too far on the euro. But this range won't change. This trend line won't change. So guess what I'm looking for? I'm looking for a break and retest of that trend line and then trade it back towards the top of the range. So that's the euro this week. I've already got that sorted. I don't need to do too much more. I will get back to the Aussie, of course. Euro Aussie, go back to that previous bigger time frame that I've just spoken about, the weekly on the euro, right? And the only way I see this going is down, okay? Bring that back to Euro Aussie, and we've got a bullish Aussie. Aussie's going quite okay. So we're looking to trade this short. We traded this short, I'm very pleased to say, from this area here. And we got out when we hit this area here. But fortunately, it set up again last week as a false break. Let me go a little bit tighter on that. As a false break of this trend line at the top of our range. Surprise, surprise. We got back underneath the trend line. We came off the top of the range, and then we retested that trend line. That's going to be an entry. There was a little bit of concern about this one, and I actually didn't take it on the first attempt. The concern was that we didn't have enough reward available to us at the bottom of the range. But then we got a second, absolute second option on that. And we had a little trade line coming through here. I call them trade lines because that's what I trade from. That not only repeated that dose, but it gave us a nice little break of the trend line and a retest of the trend line. That's going to be an entry for me every single time. So although we haven't gone a heck of a long way, we are back in this short on Euro Aussie, and it's doing exactly the same thing as we're looking for every single time. We're looking to come off the top and put in either a lower high or give us a false break of something. False break of the top of the range, lower high, false break of the trend line, lower high, away we go. So that's absolutely what we're looking for. And when the market goes sideways, as it promised to do last week, given that we're in the middle of all those ranges, if you go back and have a look at the recording of that, that's exactly what we're looking for, the middle of the ranges. And we're bang in the middle of this range, euro pound. I haven't found a way into this yet, but, and that was the issue that I was talking about, went too fast up to the top and went too fast down to the bottom. Didn't give us a significant lower high here to trade to the bottom. Hasn't reached the bottom. It's caught up in the pivots here. But this is one I'm really, really keen to trade at some stage. And if we do get a signal off the top or the bottom of these ranges, then bang, I'm in, like Flynn. But I don't see any way to trade this at the moment. It's speculation as to which way it's going to go from now, because we've now at a support level, according to the pivots and the trend line / trade line. But the last thing we did was come off the top of the range. So really, we're looking for a lower high. And this candle here suits right down to the ground. This one right here. The problem I've got is I'm trading straight into what was the weekly pivot, which is why I couldn't have taken that on Friday. Not that I was trading on Friday, but I couldn't have taken that trade because we're trading straight into support. But this will move tomorrow morning. And by the look of this, it'll probably move up to here somewhere and maybe give you an actual reason to have a look at that candle, because it'll be very close to that level, I would imagine. And therefore, I'll be looking at this very, very closely tomorrow morning, euro pound short. I don't know that it'll be available on a daily chart. Let's have a quick look at that. No, it won't. But yeah, take a good look at this tomorrow morning, euro pound short on the back of that 4-hour bar right there. We spoke about this earlier, or I think Ash was speaking about it earlier, where this is and I speak about it often, this is a white bar, if you like, or a green bar, whatever you want to call it. It's not significantly a seller bar. It is a high test bar, but what's it testing? I'm not sure. DR1 on that day, that's evident. But I love this. I think this is the best that you can do. And it ties in perfectly with my slingshot strategy, because it's giving you a run up. And if these bulls are actually in charge, then the market's going to go that way. But if they're not, then the market's going to come back through that level and it's going to have a bit of acceleration attached to it. And that's where we're going to get into a trade. And for that reason, I'm a very big fan of euro pound tomorrow morning. If the market gaps up here, forget it. But if we get the opportunity to trade this, I think that's really worth having a good look at tomorrow, because the last thing we did was bounce off the top here, and we haven't had a significant lower high until this point. So have a good look at that tomorrow, guys. I think it's worthy of your attention. Euro yen. I'm spending a little bit of time on the euro pairs because they're very, very interesting. And the reason they're very, very interesting, actually, I want to go back and show you. I should have done that from the outset. Euro dollar was the absolute P for that. If you have a look at, probably the daily chart shows it best. We were talking about earlier. There we go. We were talking about earlier the difference between a market that is pardon me, low volatility versus a market that is high volatility. And I did a bit of a presentation on this last Sunday. If you have a look at this market here, that has got relatively slow moving, like Mississippi River type stuff going on versus what is happening here, you can see a marked difference. But what if I was to put a line through, say, there where it changed and where we are now? This is low volatility pre-coronavirus. This is high volatility during coronavirus. And what this is really telling me, and we've slowed down a bit, right? We've gone back into that low volatility situation. What this is telling me is, here's where you need to take note. We have moved from a very, very, I won't say predictable, but far more predictable scenario in euro dollar in particular, but every currency pair is going to be the same, to a very, very unreliable scenario here in terms of where we're going next. Imagine if you're going short here, bang, gone. Imagine if you're going long here, bang, gone. But that's, you'd be led into those positions because you've got such a massive move in a very, very short space of time. So momentum, gets you into a short here, no problem. But this is what high volatility will do. But during that time, you've still got those little ranges into which we can be drawn and we can trade. And that's what I'm talking about here. So, okay, we've slowed down a little bit, but we've come back into the range. We can look to trade it and trade it as a range. So no issue there. I was talking on Aussie. Sorry, I had to just divulge my little plan there. What I see here on Aussie US dollar, and we spoke about this briefly, was, yes, I can see a cycle off the bottom here, higher, low, higher, high, higher, low, higher, low, higher, sorry, higher, high, higher, low. We spoke about this last week. And we said we were going to go into a consolidation period, but I expected this to retrace probably to the bottom of here, which was the breakout area, but more so even to the monthly pivot. That hasn't happened, or should I say it hasn't happened yet. I'm not sure what happens next, but this looks really bullish now, and it has broken the top of our range, but only barely. So I am not going to get sucked into a long here, I've got to say, although this has broken the channel, which to my mind is probably a little bit of a flag pattern. Those of you who know what a flag pattern is, it tends to break to the high side because it is a clear and obvious retracement. So I get all of that, but I'm not yet convinced. What would convince me? Well, if take out this high, I suppose, is the obvious answer to that question. But I'll be looking for this even as early as, maybe not tomorrow, but Tuesday, to show me exactly what it wants to do. So when we're trading ranges, we're looking to trade either a break and a bounce of the range, a break and a retest of the range and trade it long, or we're looking to trade a break which is false, which comes back into the range, gives us a lower high and trade it to the bottom of the range. So I'm not seeing either of those things right now. So I'm on the sidelines. I'm out of oil, basically. So what I'm really looking at is a signal to tell me which way this is headed next. And it wouldn't surprise me either way. I've really got no reason to think it can't go long for the purposes or the reasons that Ainsley's just said earlier, and the reasons that I've been banging on about for the last month or so. I think the Aussie is on a level playing field now where it hasn't been for maybe 6-12 months. And I think it will show its true colors. I'm not sure why it will rally to 69, 70, 80, whatever the price it goes to will be. Sorry, I am sure why. I'm not sure where it lands. That's the only thing. But I'm very confident that this time come Christmas, we won't be talking 60s on the Aussie. We might be talking mid 70s, something like that. So is this the time to do it? Well, maybe it is. I don't know. I really don't know. We're in a position that is not telling me right now that I should go long. But if this high is taken out and we get a retest at the top of this channel, then most definitely I think we're in a position to go long on the Aussie. I won't keep this going because they're all very, very similar. Aussie yen's the same. We've bounced off the bottom. We're looking to, pardon me, for a retracement that really I wasn't satisfied with. If you go down to the smaller time frames here, I was looking for maybe a false break of this level, then trade it to the top. It looks a little bit toppy, I've got to say. So I'd be still looking for that opportunity if it does come down here on Aussie yen. Aussie CAD's really interesting, and I agree with Ash, and we'll be looking at this very, very closely in the show tomorrow, whether the CAD is actually worth trading. Is it actually possible to trade the CAD at the moment because of the oil situation? You've got to have a look at the technical scenario here and think that, well, okay, we're pretty toppy as well. We've come to some really good resistance levels, but we're not at the top of this channel yet. So maybe there's a level through here that provides us with more resistance than we've got at the moment. So maybe that is still a buy. I don't know that that's where I want to be. Dollar yen, we've spoken about this at length. We came off the top last time and we put in a lower high. Therefore, we're short. I don't see any reason to change that at the moment. I think that's probably a good position to be in. And if we can hang on to this and don't get stopped out until we, sorry, let me go back to that wider picture. If we can hang on to here and don't get stopped out until we get to the bottom, this is going to be a banger of a trade, absolute classic. But we're in a range, as in all of the currency pairs that we've been looking at. And really, I'll be looking to trade it to the top on an intraday basis. I think we've got our stops in a pretty reasonable place. And if this continues along here, well, I think we can still make money out of this until it breaks, whichever way it's going to break. So that's pretty much the attitude that I'm taking into all of these positions. If we've got a range, trade the range from the top to the bottom. Really, mate, I must be so boring to people who are listening to this because I keep saying the same thing every time. Here's the one that went wrong. And I'll explain this to you. We came off the bottom of the range. It looked like a false break. If it looks like a false break and it smells like a false break, it's generally a false break. And when you get the retest of not only the trade line, but pretty much we're on a daily pivot as well. We're at the bottom of the range. We just come off it. This one just didn't work. It's as simple as that.
You're just saying you must be boring to people, Jeff. I remember when you went on a run of 16 out of 18 months profitable. That's the kind of boring that people want. And the truth is that Slingshot's not a glamour strategy. It's not a trend trading strategy where you make 5 to 1 or 10 to 1 or any of that kind of stuff. It's just a strategy that consistently gives you small winners at the end of a month. Great email from one of your clients we got a couple of weeks ago, Jeff, about having, struggled through everything else and finally got here and settled here, spent maybe 6 months working with you and just all of a sudden find themselves a couple of thousand pips up and pretty happy, And I think the Slingshots, a lot of people in life want a TV moment, that moment where, oh, wow, everything's better in life. But that's not the way that that life works. And the way that life works is it changes slowly. And the Slingshots is a strategy that changes slowly. It's just a strategy that you and I traded together for a long time, back when we were both young. And I always say this, when people ask me where I learned to understand the market, this is where I learned to understand the market. The stuff that's just behind the Slingshot when you're talking about it, explains the market in really simple, honest,
the technical side,
it's just clear.
Yep.
And everyone looks at it, most people look at it in the opposite way, but the Slingshot taught me to look at a chart and go, well, this is what's going on. And, I hope it is boring because it's always the same. If you see the same chart, you'll say the same thing. And that's a good, positive thing. Mate, how close are we to wrapping up? I've got another webinar in 15 minutes. I've got James waiting for me for a bit of a chat.
Yeah, no, I'm done.
That one. Are you done?
Yeah, look, I'll just keep going on because every single chart's the same. Those that are ranging are tradable, and it's as simple as that. And interesting, you should use that television analogy because as you, well, yeah, you probably don't know a whole lot about my media career, but I did television in the 80s, and I was a television presenter for a very short period of time because I hated it. And that really does go. I really like that analogy because I didn't like it for one moment. Didn't want to be in the spotlight. The only time I want to be in the spotlight is late at night when I've got a few beers in me. And
when no one should put you in the spotlight at all.
so the reality is exactly as you portray it. I like to be in the nice little shadows and just do it the way it makes sense to me.
Look, it's everyone has their own strategy, and some people, they really need that 10-to-1 winner, that first time they get a big winner, and that makes them feel like a trader and feel like they've broken through. And I think that's the difference. The slingshot doesn't really feel much.
No,
it's
that's
not a
right.
feel strategy. It doesn't give you amazing wins. Look, if you take 2 losers in a row on the slingshot, it really frustrates the crap out because it doesn't happen very often, right? It frustrates the crap out of you, right?
You don't like that.
But other than that, there's not much emotion to it. And I think that when you're learning to trade, as I say, we teach on the Silver Mentorship, and it's, all of a sudden when you're getting on YouTube and doing the same stuff that a year ago was unglamorous, but now people are seeing the results. And it's really bringing some focus back onto the slingshot inside the company, which I really like. Mate, should we wind her up?
Mate. Yep, I'm done. Away you go.
You'll be in Monday, Tuesday, Wednesday, Thursday, free to all on YouTube on the for the UK session. $34.95 a month to listen to the guys on the US session, where they tend to have a little more time to do some technical analysis. Do join them. It's to be honest, I would have no hesitation charging a lot more than that if we wanted to. We're not about that. We're really about trying to get this information out to you guys and as many of you as we possibly can. We want to build these guys a big following on social media. Get your friends to come along. There's no better way to learn the trade than watch the guys trade. Cheers, Jeff. Thank you to Ainsley. Thank you to Ash for being in. Thank you to all of you guys. Been huge numbers in the room again today. Hope you've enjoyed it. There'll be some information coming out about those offers in the next couple of days as well. We will get them clearer to you. There'll be a new offer tomorrow, and I'll get that out to you guys as well. And it's a pretty cool one too. It comes to everyone, tomorrow's one. Have a good week. Trade really carefully. We're setting up for May now. May is the month we're going to break through. May is the month we're going to break through. We are setting up for May now. Write it down. What do you need to do better in May to make money? What's the one thing, if you got right in May, would make a difference to you? Write it down and then do it, and come with me on the journey, because we are going to turn some of you guys who are break-even traders into profitable traders in May. It is my goal. Talk to you soon, guys. Thanks very much. See you later.
Bye, y'all.